Hello students, till now we have studied that if a partner retires from the business, what is the accounting treatment in that case? Now we will study that if a partner, any partner dies, he expires in a partnership firm, what way this accounting, this treatment is done for the retiring for the this expiring partner here. So the treatment is the same like that retirement of the partner. All the assets are revalued, assets and liabilities revaluation account is maintained, capital account is done, in which all the amounts which are to be given to a partner, retiring partner or deceased partner, that is credited, and the amount, some amount like P&L, this debit balance, and some expenses, fictitious assets, like if it is not written off, that for that it is debited. Okay, so this is done after though and because this partner doesn't exist, so this amount is then given or credited in the account of executor by paying in deceased partner's executor account. Whatever amount is payable to the deceased partner, that amount is paid to his executor. Okay, if the amount is paid one time, full payment is done one time, then this entry is done. And if this is made, the payment is made more than one installment, interest is given at the rate of 6% per annum, and the entry for that is interest account is debited and to deceased partner executor account. When installment is paid, at that time deceased partner executor account debit to bank, we do this entry. Okay, now we'll take a question after this and we'll try to solve that. Now this is the question on your screen, that ABC were partner in a firm sharing profits and losses in the ratio of 5:3:2 respectively. A died on 28th February 2018. The balance sheet at the date was capital account ABC is given 12,16,12, total 40, and general reserve 12, and creditors 22,000. Okay, so here general reserve will be distributed among partners in their old profit sharing ratio. Now it says machinery is 35,000, furniture is stock, debtors and cash. This is given 74,000 is the total. Now the partnership deed provided that on the death of the partner, the assets and liabilities are to be revalued. Assets and liabilities were revalued follows on the A's death. Okay, so machinery 45,000 and furniture 7,000. Here we will see what is the value. Machinery value has increased, furniture value has also increased. Revaluation account. Provision of 10% was created for doubtful debts. Okay, 10% we will show it on this debit side. The provision of 15,000 was made for tax. So provision is to be made for tax. This is also to be shown on debit side of the revaluation account. The goodwill of the firm was valued 15,000. So on A's debt, this is the firm's goodwill 15,000. We will find out the share of this deceased partner. So A's death is there. So his share is 5 out of 10. Okay, half share is there. So 15,000, 7,500 is the amount of this goodwill to be given to him. the amount payable A was transferred to his executor account, and executor account, this now will be this amount to whatever is to be given to this A, and that will be this given to his executor. Okay, then his this balance will be transferred to his executor account. Then comes that you are required to prepare revaluation account, capital account, partners, and balance sheet of B and C. This is to be done. Now we'll take, first of all we'll make this revaluation account. Now this is the revaluation account. Okay, so increase of assets and decrease in liability, we will show it here, and this decrease in assets and increase in liability, we will show it in debit side. So here machinery 45,000, machinery was 35,000 in the balance sheet, now it is 45,000, means 10,000 increase. So by machinery 10,000 shown here. Then furniture 7,000. In this old balance sheet it was 6,000. Here you can see it here 6,000. Okay, now it is 7,000, increased 1,000. So for furniture 1,000. Okay, a provision of 10% was created on doubtful debts. So here debtors 15,000. Earlier there was no provision. Now it will be made 10% of this 15,000, that is 1,500. Debtors, good debtors are this reduced by that. Okay, so it will be shown on the debit side here, the provision for doubtful debts 1,500. Okay, then comes the next one, provision of 15,000 was made for tax, and with this profit are going to decrease. So here it is provision for tax 15,000 is shown here. Then goodwill of the firm was valued 15,000 on A's death. So we will find out, this will go to the capital account. So this is not related to this. So now we will find out the balance of this. So this is 16,500 debit side and 11,000 credit side. So debit side is more, means losses are more. So here the net loss is that is 5,500, that when it will be shared among partners ABC in their old profit sharing ratio, that is 5:3:2. So it comes 2,750 to A's account, 5/10, and 3/10 will come to B's account, and 2/10 will come to this C's capital account. Okay, so this is revaluation account. Now we will come to the capital account. This is the capital account. Okay, first of all we'll take the capital balances. Okay, that is there in our old balance sheet. So here you can see it here. These are the capital balances: 12,000, 16,000, 12,000. This will take it here, 12,000, 16,000, 12,000. That is taken here by balance brought down. Then here we come to this balance sheet. Okay, here general reserve will be distributed. The capital account, the general reserve 12,000. This will be distributed in the profit share, in their old profit sharing, so 5:3:2, in 5:3:2 ratio. So 5:3:2 when we'll divide by 10, 1200, 1200 into 5, 6000 means 6,000. 6,000 will go to the A, and 3,600, 12 3 ja 36, and it will go to this B, and 12 2 ja 24, 2,400 will go to the partner, this C's capital account. Now the next one, then creditors, it will not be this distributed. On the debit side, no amount is there which will be this debited in partner's capital account. If some fictitious assets would have been there, and nominal assets, we can say, that would have been written off by debiting partner's capital account, but here it is not there. So now come to the revaluation account. So revaluation account shows the loss, so it will be transferred to the debit side. Here revaluation account 2750, you can clearly see, and 1650 B's, and C 1100 debit. Okay, this is done. Now after this goodwill of the firm was valued 15,000. So 15,532 was the profit sharing ratio. 532, you can see it here, 532 is the profit sharing ratio. Means the retiring partner, that is deceased partner, that is A, his share is 5/10, total share were 10, 5, 3, 8 plus 2, 10. Out of 10 share he was getting 5, means half share. So half of this 15,000, this is to be given to him for the goodwill, that 7,500. It is 7,000, half of this is 7,500. So who will give how much? So because there is no profit sharing ratio, so gaining ratio will be the same. So here gaining ratio is 3:2, so it will be this bond in ratio of 3:2. Okay, so 3:2 when this amount is debited and this A's capital account it is credited, 3:2, it comes 4,500 and 3,000. 4,500 will be borne by B and 3,000 will be borne by C. Okay, this is there, and here their capital account will be debited. B's capital account with 4,500, here A's capital account 4,500, and C's capital account will be debited with 3,000 by transferring it to A. Then we will find out what is the amount to be paid to him. A is retiring, so we'll take the balance, we will add up this thing and deduct these debit amounts. Then will come the balance, that is 22,750. That amount is to be paid to him. He doesn't exist, so his executor will receive. So this will be given credit to A's executor account, will be transferred. Okay. Then we will take the balance of the remaining partners, totaling this thing and deducting the debit amounts. Then comes the balance of B's capital account, that is 13,450, and C's capital account balance is 10,300. These are the now we will make the balance sheet here. So while making the balance sheet, we will take these capital account balances and this amount that is to be given to executor. So capital account B and C, there is 13,450 and 10,300, and A's executor there, that is because this is the liability, we haven't paid it, it is still we have to pay, because if we would have paid, then here it would have been written that to bank, but now it is not there. So this is to be paid. So 22,750 to A's executor account is given here. Now I will take this old balance sheet. This is the old balance sheet. So these capitals are taken, executor account is taken, general reserve, this is distributed, so it will not come in our new balance sheet. Then creditors are 22,000. Okay, so we'll take this creditors here 22,000, and then because here in this there was a provision of 15,000 was made, so this provision will come here, provision for tax 15,000. Okay, this provision is made. Now here come to this asset side. So machinery is given here 35,000, but this question says machinery evaluate 45,000 here. So we will show it here, 45,000 machinery, 45,000, you can see it here. Then comes this furniture 6,000, but furniture was revalued 7,000, so furniture will show here 7,000. Then debtors were 15,000, and on this provision was made 10%, and that is 1,500. So here debtors 15,000, provision for doubtful debts 1,500, and if we deduct this, the net good debtors are this 13,500. Then come to this this stock is not taken. Stock is there. Stock, for stock there is no this adjustment given here, so we will take the same amount here. Stock 15,000, so here we'll take 15,000 the stock. Then comes cash 3,000, because no cash is paid and no cash has come by the this existing partner, so this balance remain the same 3,000. So this is the 3,000. Now we'll add up this thing and we'll find that 83,500 is the total of both the sides here of assets and liabilities side. So this way we can find out, you can understand that this is the same like retirement of the partner, only the amount is to be paid here to the retiring deceased partner is given to his executor. Okay, his executor account is open. Okay, this amount can be paid in this at once, or it can be given in different installments, and if it is given in installments, then interest on this amount will be given to the executor by the firm.